always, the floor is open. It's very fluid. You guys can just chime in there and ask whatever you'd like.
And hi to you, Lisa. Thanks for joining us this morning.
Yes. Hey, Lisa. Now, sometimes people say, well, aren't you the weather guy? I say, yeah. And if you look outside, it's pretty nice out there. It's 46 degrees. It's going to be kind of nice today in the 60s.
Whoa.
It's our last warm day for a while. Tomorrow, actually tonight, front comes in, and tomorrow it's nasty, ugly, cold, and from that point forward, oof, it's wintertime. All right, so let's get on with the program, shall we? Let's go to our market analysis here real quick.
So, in other words, you're saying that the weather's going to be like I would have back home.
Yeah, it'll be Canadian weather.
Some Canadian weather.
There's a little sneak preview of Jim. Let's get Jim out of there. He's not ready for prime time yet. Hold on there, Jim. Here's Market Watch real quick for Oklahoma County. So we've got 186 listings currently
186
active.
new listings, yep.
And every time we show you this, if you notice, these numbers haven't dropped to zero, nor have they really gone below these numbers. In other words, it's been very steady over the winter months.
That's right.
So back on market.
The lowest numbers we saw was just over the holidays, over Christmas, which I think is standard across the board.
Yeah. Mm-hmm. Price decrease, those are still happening.
Yes.
People are still wanting to move, and that's all. There's a variety of reasons for that. You got to get out of here, right? Maybe you're priced to move, or maybe you overvalued your property. Maybe you didn't do as much, renovations or upkeep as you thought you may have compared to what everybody else has done. So you got to lower your price. There's a lot of reasons.
Right.
And then pending, look at that number.
Oh, 235 homes are pending. That's great. So there's lots of movement in the market.
Yeah. So
a lot of people buying and selling.
As always, the numbers at the top of the screen. You can dial at any time, text us or call us.
This Market Watch is for which county? Canadian county?
No, Oklahoma County.
Oklahoma County.
Yep.
Okay.
All right.
Good.
So I think, I don't know, are you ready? I'm a little nervous. Jim is high octane. He has got so much energy.
Yes.
The first time we met
That's
Jim,
what you need.
Yeah, and his wife were like, you had like the 2-year-olds that run around nonstop, and you're like, I just need just a fraction of what you've got.
Yes.
Somehow Jim and Brooke capitalized on that, and they have kept it going through their entire adult life. And so he's a rock star when it comes to anything you need. So without further ado, Jim Foster, everyone. Good morning, Jim.
What's up? Good morning.
Hey, how are you this morning? Are you awake? Are you alert? You good?
Oh yeah. I've been up since 6 o'clock cleaning the house and getting everything ready for this time right here.
Excellent.
All
right. So hey, we normally give a little snapshot of the market and the mortgage rates and how it's doing, but let's just go to the expert. What are you seeing?
Sell. No, I'm just kidding. No, the market's kind of leveled out because if you guys remember last summer and before that, people were paying $30,000, $40,000 over market to get it. Mm-hmm. That has really softened up the last 2 or 3 months because interest rates, when they started raising them back, the Fed back in June and July, that kind of slowed everything back down. And if you think about it, interest rates, we've been living on free money since September 11th, 2001, 9/11, right? When the Fed, the government cut the Fed rate to zero, and that of course started the refi boom and the purchase boom and all that stuff. So we've been living on free money. So the whole point is that we're kind of back to normal now. 6.5%, 5.5% interest rate. So this is nothing out of the ordinary. And when I'm going to date myself here. When I was born in '69, so when I was 10, interest rates were 20%, 19%.
Yes.
Yeah. So it's all relative, but we're kind of back to normal.
Okay.
And I even remember that when my parents had bought their first house. It was 19% back in the 70s. So
we don't want those numbers.
Oh gosh.
Okay, so I kind of got ahead of myself. Okay, so you just told us some great numbers, but how and why should we trust you? Who are you, Jim? Where'd you come from? What do you do?
Well, my name is Jim Foster, and I'm with American Mortgage Bank. Now, and I've been doing this for about 20 years. So there is no expert in this field because it's always fluid. Everything's always changing, right? Kind of like the weather. You're an expert weatherman, but you can't predict really anything, especially in Oklahoma, but you can give us an idea. You can give us an idea about what's coming. You guys are usually pretty close. That's kind of like us in mortgages and real estate. We're always kind of in the ballpark but to nail it exact, there's no formula for that.
Right. If that's the case, then everybody be rich on Wall Street. So yeah.
No, right,
But-
exactly.
So you've
Yeah,
got plenty of so you've got plenty of experience there in the mortgage lending industry, obviously.
Yes.
And Jim,
Yes.
how many states can you lend in? Can you work in?
49
Wow,
states.
that's
Yeah.
great.
Excellent.
We stay out of New York, evidently. I'm not sure. I mean, that's probably a good idea, but we don't do New York.
Probably, my guess is only because it's a big renters market versus a home market.
Oh, yeah.
A lot of
Yeah.
millennials, the work
Yeah.
environment's fast paced, and it's that kind of a style of living. So
Yeah.
probably not a whole lot of houses go around. So they probably figure it's not worth the effort.
Yeah, that's all that old. That's all that old money up there anyway. They like to keep their houses.
Right.
That's right.
And they like to stay in.
You know what?
Yes.
I found out the other day there's
Yeah.
some elderly individuals that may have like capped their rent like back at $30 a month. Back in
Right. Yeah.
They're not moving.
and they ain't moving, Jim. They're not going to call you to get a mortgage because no way.
Yeah.
All right, hey, so let's go through with some questions. And as always, you guys watching, feel free to chime in yours in the comment section.
Yes.
We want you to be interactive. We want to see what you have to say. Don't be shy. No question is too dumb. Trust me, we'll come up with the dumb ones. You'll be the smart ones. All right, so what the first question is, with the current market fluctuations, where do you see interest rates going? I know you kind of teased on this a minute ago, but any future crystal ball methods here?
Yeah, nothing but up. Because what we've been monetizing the debt since 2006, and basically all monetizing means is we're writing ourselves check. You've heard about digitizing money. The government's digitizing money. So they're putting all of this big wave of money out there into the system, and at some point we're either going to hit hyperinflation or bigger interest rates. So they're starting to raise the interest rates a little bit. I don't know if they can really raise the interest rates high enough to pull all that money back in, but they can stem it off for a little while. So
Sure.
right now, our bank, our interest rates are anywhere between 6 and 7.5, depending on credit scores and things like that. I can see them going up to 9 at some point in the near future. I say about the next year.
Okay.
Wow.
Yeah.
All right.
Yeah.
Oh, whoa.
Yeah. No, so don't wait.
Yeah, don't wait.
Yeah, don't wait. Yeah, no.
Sit on the fence, in other words.
Yeah, I had some buyers that, unfortunately enough, they wanted to wait. Right, they were looking last summer, and they thought we were going to. And then now they priced themselves out of a loan because they were getting
Right.
3.5. Now they're getting 6.5, and that they're
Sure.
priced themselves out of a loan. So they have to get a smaller house now, or a smaller purchase price.
That's
Sure.
right.
Okay. Number
Yeah.
2.
So we've noticed in the industry that some lenders and banks are charging discount points for interest rates. What does that
Yeah.
mean? And does your bank charge any points?
Yes, so that's a big thing right now. So when the
Okay.
when the loans are sold on the secondary market, they've got to they're not selling them for as much as they used to, right? So you get your service release premium when you release these loans to the secondary market in tranche loans, right? So
Okay.
what lenders are doing, I've seen it mostly in mortgage banks, they're charging discount points. So for an interest rate, that is so that they can make their money up front, since they know they're not going to make as much on the back. And so our company doesn't have discount points. However, pricing does vary. So I priced somebody at my old company. The one reason why I came over to American Mortgage Bank was the pricing. Interest rates were a lot better and a lot cheaper. So discount points are actually they're there now. They're going to be here. It's depending on how much you want to pay for your interest rate, right? Whereas my bank might be 0, and the one I just left might be 1 point. So that's $100,000. That's $1,000 that
Right.
client come up with.
So you kind of touched on this without actually touching on it. So let's just dive just one more level down. When someone is shopping for a mortgage or a lender, there are different outfits in which they can go to get these rates. Can you explain the difference between going directly to a bank versus going to a lender outfit, which has a basket of other areas that they can pull from, but are limited in what the scope and what they can offer?
Yeah. So mortgage banks and banks. So banks are different. We're a retail side. We hold deposits for depositors. So we have a whole other area of loans that we can get to. Whereas mortgage banks are kind of pigeonholed into their FHA, VA, and sometimes they have portfolio products as well. And what was your question? It was
Yeah. So this, how is it different? So for example, by being maybe even a private bank versus another outfit who's restricted to what kind they can offer to the consumer, you guys can maybe work some extra deals based off the way things are structured.
correct. Yeah. Well, we have more maneuverability in the market
Okay.
than a mortgage bank does.
Ah, okay.
So if you're looking, then what should the person ask for when they go to a lender and they say, hey, who do you work for? Is there like a key word there? Some insider terminology.
Okay, so we're all pretty much in the same sandbox, if you will, right? It's just some of us can build bigger sandcastles in that sandbox, right? So when you and that's kind of what a bank is. We can build bigger things and have more options. To give an analogy, I guess the one question that if you're about to buy a house, you might want to ask your loan officer, are you charging discount points? That would be the first thing I would ask, especially in today's market, because that money's coming out of your pocket, right?
Absolutely.
Yeah. So that is something that you need to ask, because it's all about how much am I getting? How much do I need to get into this house?
Right.
And so our bank does
information.
offer. Yeah, our bank does offer. We have, which is unheard of on the mortgage lending side, but the bank side we have credits. We can actually give a credit to a buyer, for closing costs.
Oh, nice.
Oh,
There's
that's
enough
helpful.
enough margin there to do that.
Okay.
So let's tie into that. What kind of loans do you do?
Well, we do the whole spectrum. We do VA, FHA, conventional, I-10 loans. The thing about it, the I-10 loan is the Hispanic loan, and the good thing about that one, we can use what's called mattress money for those loans. So meaning if you have cash, and you go put it in the bank, we can count that. It doesn't need to be seasoned. Whereas FHA, VA, they all need to be seasoned in your account for 60 days. But I-10 loans, we can just use what is commonly known as mattress money. So, and we have bank statement programs. Our minimum credit score is a 580.
That's good.
Yeah.
So that would tie into what are their credit requirements then, right?
Yeah, well, the credit requirements are going to be your credit score first.
Okay.
And then, and we all banks and lenders run through the system called DU, Desktop Underwriter, or LP, Loan Prospector. So we take what's a 1003. We take our 1003, which is the application name, social security number, where you live, who's your firstborn, who's your mom, right? We get all that information.
Okay.
So we get all that information. We stick it in, and then we run it through DU and see what the approval says.
Okay.
Yeah.
Okay.
All right. We're going to go back and forth between the questions that we had and then the ones that are chimed in. And Lisa had a great one, which was, are discount points tax deductible?
They are not.
Oh,
I don't think.
Okay.
Let me think about that, because this is a new thing for lenders and discount points. I don't think they are, because it's part of the loan itself, and I don't think they are. But I'm not an accountant, so you might want to check with an accountant.
Right.
But I don't think they are. Yeah.
And she had a follow-up question to that was, should a buyer do an ARM loan if they know they may only be in the house for under 5 years? Good
Yes.
question.
Yeah. We have 3-in-1 arms, 5-in-1 arms. They're actually 2-in-1 buy downs for buyers. But if they're really only going to be there for a short period, an arm is a great product to keep your interest rate lower.
Are you seeing more arms these days?
I've actually, I've done a few myself the last 6 months. Yeah.
Okay.
Whereas I never sold an arm before, except back in like the heyday 2004, 2005, when it was a free for all.
And Jim, for some of our viewers that might not know what an ARM is, can you elaborate a little bit more on it?
Yeah, basically an ARM is where you buy an interest, or you get an interest rate at a certain, let's just say it's 5%, and that's on an ARM. If you would have got the interest rate on a fixed rate, it probably would have been 7. So that ARM, so after 6 months it goes up, and they go off of the off of the LIBOR index, I believe, which is where all rates are kind of connected to.
Okay.
And depending on what ARM you get, 3-in-1 or 5-in-1, the ARM will adjust up for 3 years, and then it hits its final peak. Or a 5
Okay.
year. Yeah.
And then
Okay.
you mentioned as an alternative to an ARM was a 2-to-1 buy down. How would you say it?
Yeah, 2-in-1 buy now. Yeah, so this is where the buyer of a house, if the seller is very motivated to sell the house, they can give in closing costs, or they can help the buyer buy down their rate.
Oh.
Yeah. So
Okay.
yeah, that's actually a new thing that's come out the last 5 months.
Okay, and that's been quite popular from what I understand. Okay.
Yeah, they can be,
And-
especially they I've done 2 myself.
Okay.
Okay. And Jim, these loans that you're mentioning, you can do where you're located, correct?
Yes, everything that I'm talking
Excellent.
about, we can do.
Great.
All right, let's go on to credit requirements.
Yeah.
So
Great
what
question.
kind of, this is the biggest question. Most people are afraid
Right.
of getting a home, or they think they can't even get in a home because they ain't got no credit, or it's been trashed because of this happened, that happened, my ex, my kids,
Yeah.
medical bills,
Or
whatever.
something when they were young.
Co-signing for people, right?
Yeah, it could be anything. So what's the status on that?
Well, the first thing I would say is don't prejudge your credit. I can't tell you in the 20 years I've been doing this how many people I've dozens where I say, hey, just fill out my application. Let me be the doctor. Let me look at the X-ray.
Right.
Let me tell you what we can do, because we can see things that you maybe not be aware of on your credit, and I can point them out and say, hey, here's what we need to do to get to point A to point B.
Great.
We actually have a loan. FHA offers a loan where if you have no credit, sometimes a no credit score is better than having a credit score. So
Really?
So if you come to me, you're right out of college, right? And let's say you've been renting for about a year, and you're going, I want to buy a house, and you have no credit at all. Well,
Okay.
we have the FHA offers a loan where we can use what are called alternate trade lines, meaning we can use your phone bill, we can use an electric bill, we can use a water bill, we can use like if you're paying on a medical bill, we can use that. That's alternative credit. Add that to your credit report, and now you've got trade lines enough to do an FHA loan.
That's cool. I had no
Wow,
idea
that's
that was an
great.
option. No, that's
Yeah.
great. That answers that question right in the face.
Yeah.
Right.
Okay, so let's tie into that because the credit is a touchy subject, and usually for a lender, from my understanding, is when someone comes to approach you, probably your first thing you tell them is do not go out and buy anything. So can you elaborate on when people get down to the wire to that process of buying a home, and all of a sudden they say, oh, I see a car over there I've been wanting to buy.
Or I need furniture.
I need furniture, or there's this big
Whoa,
purchase I need.
Slow down there.
Yeah, what do you
no,
say to that?
Well, I say read my email down at the bottom. I have the Jim commandments of buying a home.
Oh,
I like
love
that.
it.
And not the first one is don't co-sign for anybody, or don't buy a car or a van because you may be living in it.
Yes, good one.
Down by the
Yeah.
river.
Yeah.
If you're in the process of buying a house, then you don't want to do anything that's going to negate what your goal is because you
Yes.
felt you needed to get a car or something like that. I just tell them to slow down. Yeah.
Right.
Okay, because that process, when they do, so my understanding is they can't hide it. In other words,
Right.
you guys are going to find out if they've got hidden money somewhere, if they've made a purchase. It all comes out in the end, and that can mess
Yes.
up the deal. Is that correct?
Correct. Yeah. So if they buy something and they didn't disclose it, then that can, we have to re-underwrite the file, and it could just be a big snafu.
Big,
Yeah.
Right.
And
Big
so,
nightmare.
So in other words, that has the potential of kicking them out of the home
Yes.
that they were settled on moving into in 2 or 3 weeks, from then.
Oh yeah. Yeah. I've seen it happen in my career.
Wow.
Yeah.
Okay.
I've unfortunately only, I think, twice in my illustrious 20-year career as a mortgage guy, twice it's happened. Yeah. And
Okay.
they had to find a smaller house.
Okay.
Ah, sure.
Yeah.
At
Yeah.
least you found an alternative.
Yeah, you don't
Yes.
give up on them, right? You
We
just keep working with them. Says,
Yeah.
all right, I understand, impulses or something out of
Yeah.
your control. Let's still work with you, see what we can do.
Right.
Okay.
Yes, yeah. We're always, if you're a good loan officer, you're always trying to find the way through to get at least where we wanted to be.
Okay.
Yeah.
Okay. And then, Jim, tell us a little bit about the underwriting process.
Underwriters. Well, that's a whole other universe, because we don't know who underwriters are. No, I'm just kidding. No, we are. I thought they were just kind of a figment of everybody's imagination. These loans go off and call an underwriter. Right? Yeah. No, the underwriter. So we of course, every bank has underwriters, and an underwriter basically is the one that takes your file. If you're a good loan officer like me, you put together a strong application. You get all the supporting documents, W-2s, pay stubs, any letters of explanation. Because when you look at someone's credit, you can see the history of the last however long they've had credit, and you can see back in 2017 that they were 30 days late on 4 things. So that means something happened back in 2017. What was it? An underwriter might want a letter of explanation on that. But underwriters are there to kind of go through the loan with a fine-tooth comb to make sure it complies with it's compliant with all of the regulations.
Okay.
All right, so let's jump into what people really want to know and they're concerned about, because everybody, all of a sudden, it's nice, the process is slow, they're taking their time, and then out of the blue, it seems like it just ramps up, and then all of a sudden it's go, 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 and then boom, it's closing day. So what is the average closing time during this process when it's time to get serious and they've come to you, they got pre-approved, and now it's time to sign on the dotted line? How's that process finalized?
Yeah, so they're signing their contract with you, the realtors. They're the Tuttle team, right? They sign the contract, and you have your closing date, right? Typically, all contracts are typically written, unless there's some nuances with the sellers or something. 30-day contracts is what it boils down. Yeah, our average time of closing, I think, is 22 days. But that doesn't take into consideration if you have title issues or appraisal issues, things like that. Yeah. So 30 days is typically is what you want to reach, but I try to get it done faster, because especially last summer when houses were just flying off.
Right.
I was getting 25-day contracts, 20-day contracts to see if we could do it.
Wow. What's the soonest you've ever seen it happen?
Well, my personal record is 12 days, and that was yeah. But here's the thing: we already had appraisal and title work. It was a rescue loan, so I mean, all the pieces were already there. Now, if we're just talking about a contract that hit my desk, 20 days, we could get it done.
Now, I kind of glanced over this. Sometimes you put the cart before the horse. The quote pre-approval process. Is that a smart thing to do, to go to a lender and go, hey, I think I want to buy this. I think I can't afford this, but I'm not sure. So maybe I should go and get pre-approved.
Yeah. Well, yeah. If you're looking for it's kind of funny. The market had shifted in 2002, 2003 with respect to before 2002 and 2003. Buyers would go to the bank first to get an approval, then go find the realtor. Well, the market got flooded because of the refi boom and all that stuff. So it kind of turned around where buyers are just going to houses, talking to realtors first, then circling back to us to get the approval. Well, I have noticed that now it's kind of coming back the other way because of interest rates. That you should always go for you should always go to a lender first to find out what you can afford. And to save your time and the realtor's time. And you realtors, I got to give you, I always give my props to realtors and title companies for sure. But you guys drive everywhere, you talk to everyone, and you guys are in your cars more than a truck driver, I think.
Our car, most times, is our office.
Yeah, it's the office.
It's our traveling office.
Yeah. Yeah. And then you've got us, us lazy loan officers sitting back at our desk going, are you ready?
Yeah.
So for me personally, I always want to work with someone that's been pre-approved. So I would always want to send them, because if they're looking at homes that are out of their price range, and then all of a sudden they realize, oh gosh, I can't afford something that nice or that expensive, and then their outlook on those homes change significantly. So it's always best practice.
Prime example: 3 weeks ago, got a realtor sent me a guy super nice guy. He goes, yeah, I want this house, blah, blah. I got sent out the approval letter. All right, got it, right? And then I call and talk to him about payment, say, hey, we haven't really discussed anything because he's so busy.
Right.
I said, you think we need to talk about your payment and all that stuff? Because, loan officers have their checklists, and I've been doing it so long, it's memorized now, but we have our checklist where we go A, B, C, D, E, F, and the first thing is the very first thing on my list is talk about payment and interest rate, because let's get that out of the way. Well, we're 2.5 weeks into the contract. He finally gets back in town. I was able to get a hold of him, told him what it was. And he goes, oh man, I don't really think I want to pay, $3,000. I'm like, well, that's okay. So busted the contract. He's looking for a different house.
Sure.
He goes, lesson learned. I said, yeah, man. He said, I know you've been trying to get a hold of me for the last 2 weeks. I said, I've been traveling. I said, oh, well, it's no big deal. Here we are.
Yeah. Cause sometimes that final big amount at the end is what will do it for a lot of folks. It's like, what can you afford? Mm-hmm. What do you want to pay monthly? Mm-hmm.
Right. So, and a good loan officer doesn't want to make anyone house poor, right? We don't.
Same with us.
Yeah.
Absolutely. Never want to overextend.
And I think a lot of people do. They fall in the trap of putting everything into the mortgage and they have nothing left over for maintenance, for routine things, emergencies, stuff to fill the house in. You bought a 4,000 square foot house and you've got 2 couches.
Right.
You're going to have to buy.
What are we back in college?
Yes.
Okay, so we kind of touched on this in a prior episode of rent versus own. But just so that they don't hear just from the realtor standpoint as a bias, so to speak, from a lender standpoint, is it always a good time to buy property?
Well, yeah, because if you're paying rent, that's 100% interest rate, right?
Mm-hmm.
Because you're paying that's 100%. So it's always good to own something of yourself and build your credit. That's always a big thing. Build your credit with a mortgage. But if you're paying somebody $1,000 a month and you can get into a house for $1,000 a month, why not that money work for you? Yeah. So I'm a big proponent of buying houses. And not just because I'm alone. I mean, it's a smart investment.
Right, because then you're building equity for yourself.
Right.
Absolutely.
Yeah. I mean, you could sell that house, 2 years from now, and because here's the thing. That's a good thing is property values are always going up. I don't think in Oklahoma now, Nevada, there are certain one-offs. I understand that, but Oklahoma in general, our property markets have always increased. I think the biggest increase was like 3.5% back in 14 or something, and it's an average of 1.5% a year of going up. So
absolutely.
Okay, you know what? And kind of Lisa made a comment in this that got me thinking. What is your relationship? Because there's another hidden entity behind the scenes that nobody ever hears about or even knows exists until you're sitting down to finally sign the dotted line, which is like 100 pages deep, and you're just signing away. You have no idea what you're signing. You're putting full trust into the lender. You're putting full trust in your real estate agents, and you're putting full trust into this mystery entity called a title company. How is your relationship with the title company?
Great. I give props, as I said a few minutes ago, to realtors, title companies, especially Legacy Title. These ladies that work there and gentlemen, imagine this. Imagine being at a desk and you're getting phone calls every day from loan officers, from realtors, from builders, from inspectors, from everybody calling, and half of them are hey, what's going on? Blah, there's something going on in their life, or something didn't go right. They're always smiling. I can't tell you. It blows my mind. It really does. I've been doing this 20 years. That the crews, and especially at Legacy, are at title companies. They're, for the most part, you walk in, they switch it on. They're smiling. Yeah.
Yes.
So our relationship, as far as lenders go with title companies, it's totally up to the realtors. They choose their closers. Yeah, they choose their closers and place where they want to close.
Okay. And then so the working relationship you guys have, the title company depends on you, and you depend on the title company. So the two of you can't exist without the other. Is that correct?
Correct. It's a symbiotic relationship. And exactly right. Yeah. And especially in Oklahoma, because we're an abstract state, so they do a lot. They do a lot of work.
Okay.
And we'll discuss more about title companies in a future insider interview series, because we want to provide value and education in all aspects of owning a home, buying a home, going through that process, maintaining a home. So all of our preferred partners, we want to say, give them a platform to say, hey, this is what you need to know.
Right.
That's going to make your life so much easier.
Absolutely.
Right.
So in the end, it's best practice for real estate agents to team up with a lender, correct?
Yeah, yes. Every realtor should have a lender that they can go to, a preferred lender. Of course, I would like to be your preferred lender, but you don't necessarily need it. But it's good to get that relationship with somebody that you can call and ask questions, and because there's that lending changes every day. It seems like, because we have to do our CE classes, continuing ed. There's rule. I mean, it's like a never-ending wave that keeps hitting the beach.
Sure.
There's storms and stuff, So they're hammering down on us with regulations and stuff, but we keep up with it.
So as we kind of start to wrap up our interview here, unless you guys have any questions, make sure you put them down in the comment section here real quick, and we'll address them. But one of the final questions I have for you at this point is red flags. In this industry, I hate to say it, but there is some unethical behavior. And it's unfortunate, but everyone's human, right? And they have their weaknesses that stem out of something, out of clear blue air. They were great, now they're not so great. What are the red flags you look for when you're dealing with the lender that says, "Oh, I better stay away from this company or this lender himself and go to someone else," or et cetera? Is there anything they should watch out for?
Yeah, well, I guess one of the things was if they don't answer the phone.
Right.
Okay. Communication is kind of my litmus test with anyone in the industry, really, but especially lenders. Because they've already got your social, they've got your DNA. I mean, they got everything already. They got your bank accounts, right? Yeah. Sure. So communication would be the apex for me, the litmus test.
Okay. And then you said kind of a secondary one earlier in this interview was to maybe shop around if they come right at you about buying points. Is that what the?
Yes.
About that.
Correct. Yeah, the discount points. Yeah,
discount points.
You'll want to take a look at your fees worksheet. The old days, it used to be a good faith estimate, but they're called fees worksheets. Loan closing disclosure. Ask if you're charging any points, and that can be from on a $100,000 house, it's 1 point's $1,000. So you do the math from there, and if they are, then you might want to call around.
Okay. And then Jim, Carol says, everybody's looking good this morning.
Oh, thank you, Carol.
So Carol's a fan of Jim Foster.
We love Carol here. Yes.
So,
Brooke says hello.
Oh, yeah, Brooke. Yeah. Yes. We love Brooks. Great. Let's see. You guys, any other questions from you, Jody?
No.
Anything else from you, Jim, as far as any parting advice or information?
How can people reach you, Jim?
Yeah, let's go with that.
I'm available on Facebook. My phone number is Facebook. I'm at American Mortgage Bank. You can reach out to me anytime. I always answer my phone. I'm always communicating with my realtors and my buyers or their buyers.
Okay.
Yeah.
All right.
Excellent.
And we do have his information on our website as well, TeamTuttleRealty.com. You can just go there anytime, and not only can you search for a home, you can see what the Joneses home next door is worth. Give you an idea what yours is as well, what they're sold for recently. If you saw somebody just move in the neighborhood, and Jim's information is on there, his email, his phone number. You can get the information that way, and of course here.
And you can also get pre-approved.
Yeah. Oh yeah. There is a process there to get pre-approved. You can start the process. You can figure out exactly what you can afford, and then you can budget accordingly. So as we talked about earlier, you don't stress yourself too much.
That's right, and it goes right to
go in knowing what you can get, right? And I've got a motto. I've been living by this motto for years. You work, I work.
Yes.
Motto.
I do a lot of relocations. People that are coming from out of state and like New York, California, and so they're on different hours. So yeah.
Oh, that's true, because 49 states.
49 states. That's right.
Boy, Jim, do you sleep?
States.
Yeah. Do you sleep at all?
Right. So we have
Occasionally-
someone.
Yeah, we did. Actually, we had somebody sneak in a question here at the end.
She joined a little late.
That's
So
okay.
Jim, if you have if you have time for another question.
Yeah, please. Yes.
Okay, and this is kind of related to the question we asked before, but is can they take away any of the deductions off taxes from buying a home?
Have they taken away?
Or have, yeah.
Yeah, there are.
Oh, have they taken away? That's right. Okay. In other words, I guess there used to be and no longer.
There used to be. Yeah, I think there's still some on there, but that is something to ask your accountant about. Yeah,
Right.
Because I know you used to be able to write off your interest, and you write off a few things in the title work, but they do change that around a lot.
Okay. And then,
And she had a follow-up question.
yes, is pre-approval the best way to go? And sorry, she's joining late. So Jim, if you want to touch on
No
that.
problem. Yeah. Welcome to the party. Yeah. No, yeah, your pre-approvals. Yeah, get a pre-approval for you or your clients or whomever it is. It's always best to know what they can afford, right? And especially for the realtors out there. I've got a few realtors in my pipeline that use me quite often, and they don't do anything without a pre-approval.
Right.
At all.
Yeah.
Okay.
And we're one of them.
Yeah.
And you're one. Yeah, it's one of those things where you don't. It's not that you don't want to that person's business, of course, but it's like, hey, I really,
Right.
You're up here with what you want to buy, and you might be kind of in the middle. So let's go ahead and find out what it is and get you going that way.
So Jim, for the pre-approval process, this made me think you're pulling credit at that time, right? You're not just manually running numbers saying, okay, based on what you've told me, you can go out and afford this, and then you're pulling credit. So
yeah. So when I'm sending a buyer, I will text them my app location, and then they will get in and fill it out. It takes about 10 minutes. I'll get the notification. I'll go in, pull their credit, put all the numbers together, then I'll give them a call to go over income, make sure their income is what they put, and then we back it out from there and say, okay, here's your price point.
perfect.
Now,
Okay. Good.
and I'm glad you said that because she did. And this will be the final question. Then we're gonna let you go. And this bothers people.
No, my wife's just going to make me clean anyway, so I like to stay here.
So in other words, let's go to OT. It's overtime.
I want to stay with you.
So the credit deal, that's a touchy subject when people are afraid to have their credit pulled because usually take a hit on their credit score that they work so hard to build up. Can you explain the difference, how you approach that with a soft credit versus a hard credit pull in this entire process? Is there two versions? Is it always just a hard or is it a soft? How does that work?
Yeah, so with the loan officer, it's always going to be a hard pull. Now, I know that Obama back in 12 or 13 passed some bill where it's not supposed to adversely hurt your score when you pull. Because I get that question a lot. Guys, man, I just had my credit pulled, right? So there was some law that was enacted that it shouldn't do that. So if I have to pull you got it pulled twice by a couple of banks, and then I pull it. The most I've seen an adverse effect on a score is 1 point at the most, because we're lenders, we're banks, we're allowed to look at credit. Now I do know the reason why they brought that law into effect was because car lots. I don't know if you ever went and looked for a car, but by the end of the day, you got 40 pulls on your credit, and this is a big thing that was happening in the 2000s, in the 1990s, where they'd have a 700 score. By the end of the day, it was a 550 because of all the credit pulls. So they have fixed that now. So there's really not any adverse effects, or shouldn't be, with your credit score. So don't be afraid to get your credit pulled. And if you pull it within, I think it's 48 hours or 24 hours, it should have no effect whatsoever. Now the soft, yeah. Now the soft.
Real quick before you get to the soft part, since that is a hard pull, is there a time window in which they need to complete the whole mortgage house hunting process before it has to get pulled again, and then you get another hit?
Pre-approvals, yes, they're good for 90 days.
90 days, okay. So once you commit, you've got 90 days to get it done.
Yes.
Correct. After that 90 days, then we have to re-pull the hard pull.
Okay, so what's the soft pull that you mentioned?
Soft pull happens on the underwriting side at closing. So typically, what a soft pull is the underwriters will pull what's called. They won't pull. They're going to find out if you have any new trade lines, like that car you shouldn't have bought, or that trailer, right, or that furniture. They're going to do a soft pull to see if you have any new trade lines.
Okay.
And we have one last question sneak in.
We have another question from Corliss.
She just, go ahead.
So she is asking, so a pre-approval doesn't need to be done in person?
No, not at all. And the old days of people coming to offices and doing it, it's still there if you would like to come in. We would love to see you. But we know, especially today, everybody's connected, by these, right, computers. So I have a mobile app that I'll send you, fill it out, and we never have to meet. Yeah.
Okay.
Wow, that's great.
But trust me, you want to meet Jim just so you can cipher off some energy.
Oh, yeah.
Yes, yeah. But I do go to all my closings, so I will see you at the closing table.
Just going to mention that.
That's true.
Yes.
The big smile on his face going, you've got your home.
Yes.
You did it right. You
Oh.
got pre-approved. You didn't buy anything. You got the contract done.
We made it through the gauntlet. We're there.
That's right. Oh, my gosh.
All right,
Well,
Jim. Hey,
great.
yeah, this has been great information. This is the kind of stuff you just don't get anywhere. So I appreciate you taking the time with us this morning to discuss this and answer all the questions.
Invite.
And thanks for all the questions that were posed to us.
Yeah. Oh, yeah. Anytime. You guys,
Jennifer, Lisa.
Yeah. So thank you guys for tuning in on the comment section. Again, for Jim for joining us. Again, we'll have another episode next week. So we're going to keep peppering in the insider interviews, so that way you can learn more from the experts in the field. And then, of course, we'll always give you the update on the market analysis for our region of the country.
Yes.
Also interest rates and that kind of stuff. So thanks again for joining us. Always, the number's on the screen.
Yes, absolutely.
Text and call anytime. We'd love to help you out.
And if there's a topic that any of you want to know more about, if you have a house that you want to know the value on, you're looking at buying or selling, reach out. We're here for you.
Yeah, we'll help you. No charge. We'll take a look for you and give you everything you need to know so you can start that pre-approval process and get in touch with Jim. All right.
That's right.
Thanks, everybody, and we will see you on the next show.
Bye.